Hey, welcome back, fellow escapees. If you are new to my channel, this channel is all about personal finance, where I discuss what myself and my clients are doing to achieve financial freedom, as well as how we were able to escape our dreaded 9-to-5 corporate jobs. So if that is content that you're interested in, make sure you hit that like and subscribe button, because I drop new videos every week to help you on your personal finance journey. So in today's video, I'm going to talk about how you can eliminate all your debt or the majority of your debt within 24 months. It's not as hard as you think, but it does take a little bit of discipline. So we have to assume that you're starting from a place where you have, enough income to put towards your debt reduction plan. So if you are starting there, then this should be very accomplishable in the next 24 months. If you are in a position where you don't have enough extra income to put towards these bills or this debt, then we will need to just reevaluate your situation and try to figure out a way that you can get your debts paid off as soon as possible. But I am going to, for the sake of this video, just use typical American debt that most American households have right now that can be wiped out in as little as 24 months. So in my consultations, when I meet with a lot of people, yes, student loans is probably one of the biggest debts that American people are facing right now, besides their mortgage if they have a mortgage. But there are some really small ones that are eating away at all their extra disposable income that they could be using to put towards their financial freedom, early retirement journey, that is going all to bills or debt. And we can get this resolved soon so we can get you on the track to your financial goals. So typically, most of these debts are credit cards, car loans, and the other ones are usually some minor loans, like either department store loans or like payday loans. I've even seen some payday loans, and I've seen some little small debts like owed to family, friends, and things like that. So let's first work on the credit cards, because those are a major problem with many of my clients. They have maxed out credit cards, or they are relying on the credit cards a little too heavily when they could just have that income put aside in either a bank account or some kind of emergency fund. And so they can rely more on money they have than constantly putting themselves back into debt month after month, year after year, and then racking up all those fees, the late fees, the interest that is accumulating on those cards when they're carrying balances. Like, those kind of things can be avoided. So let's go into that. So I'm seeing right now that my clients have anywhere between $5,000 to maybe $15,000 in credit card debt. And I know everyone's situation is different, but we're just going to use that scenario for this video, because there's just too many variables with everybody that I can't, give all these different scenarios when everyone's debt and income and things like that are there's just too wide of a scope of individuals with different debt reduction plans. But I can say for typically what I'm seeing right now is most of them are between $5,000 and $15,000. And they usually have a pretty decent income where they can wipe out these debts, but they find themselves like spending the money to reduce this debt on other stuff or putting themselves into more debt. And so this could be wiped out really easy, really fast. So depending on the amount of credit cards, that could be one credit card you have, or maybe it's spread out over 5 or 10, that amount. But if you are facing like credit card debt, payday loan debt, or you owe some small debts with either family or friends, or you have those rent to own places, and you have like, electronics or appliances or furniture that you're paying on. Those debts can be wiped out usually within 1 year. I can help you wipe those debts out. So what you're gonna have to do is you're definitely gonna have to figure out where is your salary or income that you're earning from your job is going. So once you figure that out, once you go through your budget and your plan and your statements, and then you look through where is your money going, the next thing is to decide if there is any extra money from that after you pay your main bills. Is there any extra money that you could be throwing at those credit cards? And if you have it, then of course we just allocate it to those credit cards. We start reducing things like going out with friends, going out to eat. Going out to eat is like a major financial burden on most people in debt, as well as transportation. How much are you spending on your vehicles, your insurance, your gas? Is there a way for you to carpool or find lower insurance on your car? Or is there a way for you to trade in that car and get a cheaper car? What are your options, right? So what you're gonna do is you're just gonna go through all your bills and just see if you have extra money to throw at this debt and these credit cards and these payday loans, or any of those furniture store type of loans that you have outstanding. So if you can find some extra income there, of course, you're gonna have to cut out a lot of the partying, a lot of the alcohol and drinking takes up a lot of your money, as well as a lot of, birthday parties and gifts to other people. It's so great when you're able to give to your friends, or, all these holidays are coming around, but you're just overspending on all these holidays year after year. That is keeping you in debt. If you can find a way to either cut that out for that year or two, or either find a way to just like eliminate that, say, hey, this year we're just not gonna do this, or celebrate this holiday, or celebrate this birthday. We just gotta sacrifice for 1 or 2 years, because our following years are gonna be so amazing. If you can do that, you can throw all that extra money at that debt. If you go through your income, your budget, your financial statements, your bank statements, and you're like, there's just nothing left. I make, example, $5,000 a month. My rent or mortgage is eating $2,000 of that. Then I got the car eating another grand of that. Then I got kids, and then I got that. If you find there's just nothing left at the end of the day, in fact, you need to make more money, then that's another thing. Start looking for a side business that you can create, something that is not going to cost you a lot to get up and going, less than $1,000, probably get up and going, side business or free side business that you can help get up and running. Or start looking for a part-time job doing waiting tables. I mean, waiting tables is good money, especially if you get with a good restaurant. Waiting tables, I heard Amazon Flex pays their delivery drivers good money. You have, if you can do hair or makeup, that's good money. I had a lady, she does my nail, well, she doesn't do them anymore, but she used to do my nails. And I remember talking to her, and she lived in like a $700,000 or $800,000 house, which is considered kind of like a luxury house in our market, because our average house is like $300,000, $400,000. So it's like double the price of our starter homes, right? And I remember she was doing nails, but she owned the nail salon. But I'm not saying go out and start a whole nail salon. That's a couple of $100,000. But what I'm saying is, you wouldn't think that someone who just does the nails live in such a beautiful community that she lived in. So I knew where she lived because she told me, and it's a beautiful, beautiful area. But I also know that the people that do my nails, they charge anywhere from that $40 to $60 range, just depending on what you're getting done. And then for the pedicures, they also charge between that $40 to $60 range, just depending on what you're getting done. And so that's already, 80, 50 to, 120 per client. And those nail salons be pretty darn booked up for the most part. So, 1 to 5 clients a day can definitely bring you in up to that $500 a day that you need as extra money to throw at your bills. And I'm not saying you go and start a nail salon. I'm saying if you know you have a skill set where you can go get a job somewhere or a part-time job somewhere, you can like be a delivery driver, you can work at a retail store, because those jobs are kind of a little bit easier to get and they don't mind you being a part-time employee. You probably couldn't go out and get another corporate job because most corporate jobs are 9 to 5, 8 to 5 or whatever. So you can't go get 2 of those. But if you can find like jobs that, you know, hire for part-time, like retail, restaurant, or you can find some kind of skill set that you have that you can go and work for, like a nail salon, a hair salon, makeup. You can fix cars, you can fix homes, like something you have a skill set and you know how to write good articles or papers for businesses online. You can do some freelance work. You need to be looking for that type of work. And when you get that type of work, you don't go and spend that money on more vacations, more, you know, a nicer, better car, more expensive housing, more expensive clothes, more expensive gifts during the holiday season. You don't do that with that money. You throw all that money at that debt, along with anything you can get from your day job or your regular full-time job. And then within usually a year to 2 years, most of my clients are out of major debt. The one debt that they may, even a car loan, but the one debt that does hold a lot of people back is the student loan debt. That holds some of the clients like a little while, so it may take you that 2 to 3 year mark to wipe that out. But if you have like those credit cards, car loans, and some payday loans, and some of those other like I said, those appliance loans, I see stuff like that, like appliance loans. What's the other one? Those rent-to-own shop kind of loans. If you have stuff like that, I've seen those get wiped out in like 3 to 12 months. And by the following year, they're able to start tackling those bigger loans and bigger debts. So that is definitely a way for you to get out of debt, like within 24 months. And then when you're out of debt, now all the money you're making, all the money that you were throwing at that's now money that you can put into your escape plan, your financial freedom plan. And if you can hold that discipline, if you're able to hold that job or that side hustle for a few more years, you could achieve financial independence, early retirement, probably within 3, 5, 10 years. It just depends on where you're starting. How much do you already have? If you have a job, are they already contributing to any kind of 401k or anything to help you? So you can get there. I'm telling you, it's been done. I've done it. My clients have done it. But what's holding a lot of people back is that debt. Once that debt is paid off, you'll be surprised how much extra income you have to achieve your financial goals. And it's not, it won't feel like as much of a burden as it did when you were boggled down in all that debt. And now you can start building assets, creating multiple streams of income for yourself. And you can start planning to leave a job that you don't want to be at, or at least be in a position to leave if you choose to do that in the future, or if they lay you off or fire you, you're not as worried because you have this extra income. You have this passive income coming in, you have financial independence, you have financial freedom, you have money, like actual money in the bank for yourself. So I think that's all I'm going to talk about in today's video, but I will be making more content on how you can plan your corporate escape, achieve financial independence. So make sure you hit that like and subscribe button so you can receive notifications of when I post my next video. Thank you for watching.